Hey everyone, have you been watching the stock market lately? If you haven't, I suggest you start paying attention right now. The stock market crash is not just a temporary setback, it's about to get a whole lot worse. If you're not prepared, you could lose everything in the blink of an eye. In today's video, I'm going to break down why things are about to spiral even further, and how you can protect yourself before it's too late. So stick around because what you're about to hear could save your financial future. Introduction to the market crisis. Before we dive deeper, let's quickly talk about what's been happening in the market recently. The last few months have been wild. Markets have been bouncing up and down unpredictably. But here's the thing, this volatility is just the calm before the storm. Many investors are still clinging to hope, but the reality is much worse than what's being shown on the surface. A growing number of experts believe that we are headed toward a major collapse. So what's causing all of this? The global economy is facing major stress points. Inflation is skyrocketing. Interest rates are continuing to rise. Global tensions are disrupting markets. This cocktail of economic pressures is pushing us toward an inevitable crash. Historical precedents, why we should be worried. Let's take a look at history. The stock market has faced crashes before, 2008 being the most recent example that many remember. But what's different this time? The warning signs are eerily similar. Yet there's one big difference: the global economic structure is even more fragile now than it was back in 2008. Unlike the past, this time we're dealing with global supply chain disruptions continue to drag on economies. A massive debt crisis looming in both developed and developing countries, a widening wealth gap that's affecting consumer spending. This combination could trigger a collapse more severe than any market crash we've seen before. It's not a question of if it happens, but when. What's next for the stock market? So, what can we expect moving forward? The answer is, it's going to get worse before it gets better. Let me explain. More Federal Reserve rate hikes. We've already seen interest rates rise to levels not seen in years. And the Federal Reserve is planning even more hikes. This is a big deal because higher rates mean more expensive borrowing costs for businesses and consumers alike, which leads to less spending and investment. Corporate earnings are slowing. The market thrives when companies perform well, but earnings reports are showing a slowdown across key industries. Big tech, banking, and even consumer goods companies are already feeling the pressure. When earnings fall, stock prices follow. Increased volatility and fear. When panic sets in, people start to sell off stocks at a rapid pace. This fear-driven selling can snowball quickly, making the crash even more severe. The stock market's behavior is going to be increasingly erratic, and many investors will get caught up in the chaos. How to protect yourself. What you should be doing. Now, I know this may sound alarming, but there are ways to prepare yourself and safeguard your finances. Diversify your portfolio. Don't put all your eggs in one basket. Make sure your investments are spread across different sectors, including gold, bonds, and even real estate. This way, if the stock market crashes, your other assets can help stabilize your wealth. Focus on stable assets in times of economic uncertainty. Safe haven investments like precious metals and dividend-paying stocks are often the way to go. Look for companies with a strong history of weathering recessions. Don't panic sell. It's natural to want to sell off everything when the market is crashing, but this is a huge mistake. Hold steady and look at the long-term picture. Stock prices may dip, but they also rebound over time. Prepare for a recession. If the market crash leads to a full-blown recession, having an emergency fund is crucial. Make sure you have at least 3 to 6 months worth of expenses saved in case of job loss or financial instability. Conclusion: how to navigate the coming storm. To sum it up, the stock market crash is just getting started. The economy is heading toward rough waters, and if you're not careful, you could find yourself caught in the storm. But with the right strategy and mindset, you can weather the downturn and come out on the other side stronger. The key is staying informed, being prepared, and acting strategically. Remember, this isn't about panic, it's about preparation. Stay ahead of the curve, protect your assets, and be ready to take advantage when the market eventually recovers. The immediate future. What's coming next? So what can we expect over the next few months? Let me break it down for you. Continued market volatility. We've seen wild swings in stock prices, and this will only intensify in the coming months. The fear factor is growing, and with fear comes more volatility. This means you could see sharp drops in stock prices and constant fluctuations. Earnings reports continue to decline. Companies are already reporting lower than expected earnings, which is a big red flag. When businesses don't meet earnings expectations, their stock prices tend to plummet. Tech giants, banking institutions, and even consumer goods companies are all feeling the pressure. Panic selling and market collapse. The worst thing investors can do is panic sell. However, when the market begins to crash, it often triggers a snowball effect. More and more people start selling off their assets to avoid further losses, which only deepens the crash. If you found this video helpful, don't forget to like and subscribe for more financial updates and advice. Share this video with anyone who needs to know how to protect their investments in this uncertain time. Stay safe, and I'll see you in the next one.